Alright guys, welcome back to another video. I know I haven't posted in a while, so I'm remaking the standard deviation video. Basically, we're going to be measuring, I'm going to be teaching you how to use standard deviation properly, and I'm going to make sure I can go a little bit simpler just so you guys can understand this. So let's get into it. Basically, standard deviation is basically how far a projected range should go. So one thing to know is these are not real standard deviations, because real standard deviations are just mathematical equations, and those are not the proper ways to be using them if you're just using fib projections, because there's no math involved. You just draw a box. But you should kind of just use these as like general zones and even a bias to reverse from, but you shouldn't trade like every standard deviation as a level. So like, don't trade this one as a level, don't trade this one as a level, don't trade these as a level, because that's just not how it should properly go. Oh wait, actually let me add some numbers so you guys can see it. There you go, you guys can see the numbers now. I just like making mine like this because it's cleaner. Basically, -1, accumulation zone. So this can either be used for continuation entries or retraces. So you shouldn't really be trying to trade within this unless you're just trying to continue to -2. Otherwise you get cooked. But -1, like if we get a good retrace, we can usually rebalance a range while doing it. So when you rebalance a range, this will provide you a better entry model instead. So you can do something like that. Obviously you have like your 0.5 here, so it kind of lines up perfectly. And this is meant to generate more liquidity, so when we decide to build the new standard deviation model, it's like another market maker model or another PO3, then we'll have a bunch of liquidity resting just to target. But -2 and -2.5, these are your main levels to check for reversals from. -2.25 is just more in the middle to see like what happens between 2 and 2.5. 3.5 and 4, this is the same case. And with standard deviation, like when you come back down into something, you want to come back down to probably like the highest time frame PD array possible. So with these high time frame PD arrays, it should be aligned with bias, because let's say like we're in a bullish trend and we come for like a deep retrace. If we're truly bullish, then this technically should just be a rebalance of the range so we can go higher. So standard deviation is just meant to give you a little bit more accuracy, so a little bit more clarity on where you should be expecting price from. So that's why like you want to always find like a lot of PD arrays around these levels. So like for example, if you could find around maybe like 3 PD arrays in one zone, then I would say it's a pretty good zone. And that's how I usually like to keep it, so just in case. And between all these levels, like -2 and -2.5, -3.5, -4, you always want some SMT. If you don't have an SMT, then it's just gambling. Usually people say you could trade without an SMT, but me personally, like it gives me more clarity. And also when we're tapping into a high time frame PD rate, if you want it to be like the highest like guaranteed level possible, you also want to make sure you induce something. So you want price to take out a level, like a form of liquidity, and just run, like just immediately reject. That's how you know it's valid. And then when you're taking entries, you can wait for like little retrace like this, take it off like that, and yeah, you can use your own entry model. I just like OTE more. So let's get on the chart and we'll find some examples. Okay, let's go. And I like to use the 5 and 15 minute. So for example, when I'm looking at days like these, usually I'm looking at the highest and lowest points of these ranges, because these usually have the anchors that start the move. So for example, if a range is too big, I'm just going to move to the hourly or the 4-hour chart and get a better rough example. Because like here, for example, this one is a pretty big leg, so, or sorry, not a big leg, but I don't want to try and use the 15 minute when it's just this genuinely big of a range. Obviously when you're trading in the moment, you'll probably use something like this, and that's okay too. You could catch retraces too, but for example, since we're just going back in the day, I'd prefer to use a big leg like this, especially when you have a big unmitigated range like this. That's how you kind of know which one to be using. So it can either be like this, it can either be like this, like whatever is easier for you. So for example, we got this. This is our balance range to go for. So now that we understand our standard deviation level, let me pull up my ES chart real quick. Yeah, perfect. There's an SMT right here. This would have been the high time frame SMT close. So usually when I'm waiting for an SMT, I want to see it close with that SMT. I don't want to just enter immediately, because then you're kind of asking to lose a little bit more, which I prefer not to. And you can see right here, as soon as this SMT closes, that's when everything starts happening. So there you go. Basically, let's hop onto the 4 hour. Let's see, what PD arrays do we have? Let's see. Do I have an old breaker right here? I'm going to use that old breaker CE. There we go. We have a break right there. So I'm going to delete that just to keep us organized. I'll delete this range too. We have a 0.705 right here. That's our range. And what is this aligned with? Well, one, you have this OB. For OB. Nice. It pretty much taps CE perfectly. Let's scale down to the range. And we also have a giant for value gap here. Let's see. I didn't even realize this. Little IFG. Yeah, nice. We have 2 high time frame aligning PD arrays. So not bad, not bad. And then what do we also have? We also have this 1 hour rejection block. So you can kind of see how this stacks up a little bit, because right here, even though this looks like chop, you know, which I don't blame you, it actually does. This one kind of tapped into this OB before NWOG sending it higher. To be honest, it's a little bit more of a special case scenario, because NWOG obviously just pushes us in a new direction. So it just depends. But this is pretty much what I'd be looking for. This is like a perfect trade setup. Now let's say like you can trade reversals technically, but let's say like you want to wait for a good like retrace or something along those lines. Well, one, you can see here, we were kind of expecting the draw to be lower, mainly because this, like right here. So right here, we edged 0.5 and we started rebalancing right after. And honestly, when this happens, I do not want to try and long immediately, because this could be a fake move. Obviously, would have guaranteed a little bit of points here, but just a little risky for me. It's not the main move. But do as you will with that. So right here, what do we have? Well, -1. Here we generated some LRL, so low resistance liquidity or trendline liquidity. And what else do we have here? Well, one, we induce this high. There we go. So we have a little inducement right here. So many different aligning things. And then we also tapped into this 1 hour. Or sorry, 4 hour. So right here. Didn't get CE, so I don't really like it as much, but this close was very strong out of it, so I did like it a little bit more. Now, what would we be waiting for in this scenario? An entry trigger. So, for example, you could have taken off this like 1 hour OB. This would have been nice. This would have been very nice. So now that we have this, you could have either shorted right here, right at the OB, and then just stop at the low or the high, whatever you want to do. Personally, I would have just put it right here, because since this OB was protecting it, I wouldn't want to see it go higher or even go for the RB, mainly just because, like, you know, we have all this as well, and we just made a huge displacement candle, and we rebalanced this range right here. I wouldn't want to see it come back up for the RB right here. So you could have taken it down to -2.5, or even just the next intermediate low, which would be this one. So this is not a bad setup. Where'd it go? There you go. There you go. Could have done something like that. So if you were trying to figure out how to trade this next one, well, we got our little low protected. And then what do we have here? We have a 1 hour RB. 1 hour RB, we like perfectly tapped right into it. Not much on the 30-minute. There you go, we got something good here. Let's see. Didn't tap 0.5 of the range. That is pretty unfortunate. So in this case scenario, obviously, you know, we're going to be reacting off it, but sometimes we can't get those decent fills. So what I'm going to be waiting for is I'm going to be waiting for this 5 minute. CE. This would have been nice to trade back into. Obviously, this you probably would have entered right at this low just because, and stop where it would have been validated. Oh shoot. Okay. And then when this happens, not a clean leg anchor going on here, so we'll probably get onto the 5 minute, which we have right here. And you could have just traded it to -2. Or sorry, -1. -1 is like almost guaranteed most of the time, so this is where I would have taken it. And yeah, this is what the trade would have been in hindsight. I obviously did not take this trade because I haven't been trading that much lately, but this is a perfect setup to me. Some people are going to say otherwise, but to me that looks nice. But we also have LRO here, so you could have targeted this as well. This would have been 500 points. We've had some pretty crazy volatility over the weeks, so that is kind of interesting, to be honest. And you can even see here, look at that. Look, after this we react, and then what do we have here? This previous day high. Lower to hold, look at this. We react off -2. So, let's hop on the 15 minute and see if there's an S&T here. I think there's a massive S&T. There might be. Yeah, there is a insanely massive S&T right here. Oh, there you go. S&T. Okay, let's find our PD raise. Alright, so we got S&T there, -2. What do we have? We have a 1 hour gap fill. Not much here, not much here. Also have this nice little wick here. I like this wick. So you could have done that. Then we can use a daily range. Right around 0.792 on the daily range. So two things aligning. So this was honestly a very, very nice trade. Oh shoot. Alright, so S&T, 1 hour gap fill. 0.79, and that's off -2 standard deviation. I don't like to use standard deviation as one of the confluences in my trades. I just exclude it because it's more of just meant to guide my bias. So this is perfect because you can either take a continuation with standard deviation, or you could trade reversal off of it. So there's two different ways you could trade it. It limits your way of thinking, so you don't have to keep overthinking every move. It just brings a little bit more clarity, you know? Like, it's kind of perfect. So this is pretty nice to me. Oh, shoot. Okay, so you get the gist of it. Let me remove my drawings, or actually I'll keep them here for you guys. But what about if we want to use it in a high time frame swing? Well, we can take a look at the all-time high on the 4 hour. Right here. Where are we? So we had an S&T here. This is one thing I forgot to mention. So when S&T happens, like this, instead of us anchoring all the way here, we're going to take the leg that made the S&T. So we're just going to anchor off this leg because this is what the S&T is. ES did not take this high, whereas NQ did. So we'll anchor like that. You could do it. Since we're in the giant range, I'm just anchoring all the way to the low. And yeah, -2.5 obviously doesn't get respected because this is a swing position. So what you'll do is you'll look at the daily. And what do we tap into? Daily volume imbalance. And this also counts as a FEG right here. Daily FEG CE. Perfect. Two confluences off the daily time frame alone. And also, because this volume imbalance, I'm considering actually this whole leg as the fair value gap instead. It's just easier, because obviously if I tried to anchor like this, it's just not as nice. That's just how I usually do it. So you have that, and then, pretty sure, do we rebalance our good range right here? We're still very far off. Okay. But yeah, that is pretty much everything with standard deviation. If you have any questions, please let me know in the comments. I'm probably not going to post for a while again, but if this gets attention, maybe I will. I don't usually like posting anymore. So sorry about that. But yeah, that is it for today's video, and thank you. Peace.